And welcome back, everyone. This is Thomas Triple T Tug with another new bullish crypto analysis. Before we dig in and take a look at Bitcoin's daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my analysis out to others by smashing the like, ringing my bell, hitting subscribe if you haven't, and sharing your thoughts in the comments section. That helps with YouTube's algorithm to spread it out to others, especially newbies, so they can make more informed decisions. So with that, let's dig into the news first, and then we'll take a look at the charts. Today, Warren Buffett said inflation swindles almost everybody, and Munger rails against Bitcoin. And Berkshire, they have their annual meeting today in Omaha. And it wasn't just Munger who railed against Bitcoin. But Warren Buffett, he did the same thing. He gave an example where if everyone gave him Bitcoin for $25 or something like that, he wouldn't even buy it. Everybody's got their own thoughts about crypto. For Warren Buffett, I think it's more about that he can't see the value in crypto or Bitcoin because there's no tangible product, or like, for example, he gave examples about apartments. If someone was to give him like a percentage of all the apartments in the U.S. or whatever, then he would write a check and pay for it, because apartments, there's utilities for it. People can use it. People can rent it. You can rent it out. And he gave other examples, but he said with Bitcoin, there's no utility for it. He must fail to see the opportunities for as a store of value. If you think about it, he also gave an example about the U.S. dollar, money. Well, money, guess what? Someone just decided to print some stuff on a piece of paper, and it used to be backed by gold, the U.S. dollar, but now it's backed by nothing, and they can literally print as much as they want. So he gave that example. I think he failed in his example, because money, you can print unlimited amount, and with Bitcoin, there's a limited supply. And if you need to move, let's say, $1 trillion of U.S. dollar cash money, the actual money itself, do you know how many trucks and airplanes you would need to move that? With Bitcoin or crypto, you can just move it really fast. I don't think he sees that, but everyone's got their own thing. It's okay. Here's the current heat map for the crypto market. Still blood red. Luna dropped big time. So this will be very interesting to see, because based upon the reserve that the Luna Foundation guard has in reserve for like Bitcoin and all that stuff. So it'll be really interesting to see as we go down further. So yeah, pretty blood red. AVX dropping pretty hard here too, down to 55. And I mentioned in my Twitter that I've updated a lot of my entry percentages. I moved the percentage on the upper levels near the current price towards the lower levels, because I think it's going to go further down. So like FOMO levels and stuff, I don't want to touch those. So I moved them down. And in addition, I also readjusted some levels, and I'll share all those as we progress in the week. Solana, I shared some very aggressive low levels. So let's pretty blood red here. Ape is still green, which is ridiculous. Ape, it's a matter of time before Ape dropped like a hot potato. Here we have the current crypto market, and it is down, wow, $1.69 trillion, and that's even worse than this morning, dropping 3.44. Looks like people are just selling crypto, taking money out, or they're moving, they're de-risking right now. And Bitcoin's right here, $719.3 billion. Here's the current daily chart for Bitcoin. And when I prepped this chart earlier, this current candle was actually above this lower low trend line here, but now it's gone down below. So let's examine what I wrote here. Yesterday, I mentioned that Bitcoin will likely chop between 40.5K, which is this ascending trend line here, this yellow line here, and it'll chop between that and and between the LL, the lower lows here, and it somewhat did that. And I'll show you the high for this candle yesterday was roughly 40K, and the low was 38.2K before it dropped here. So it was pretty close. And I mentioned that it'll more than likely hang towards the lower zone, and it did that. It was hanging right above this line here. The current candle is the second consecutive bearish, decent sized body, bearish daily candle here. And it was, when I prepped this chart, it was hanging at the bottom of the Bollinger Band, which was at around 38K at the time. And I said that it remains bearish below the 50-day moving average, which is this pinkish line here. It's also still remaining below the bull market support band, this gray band here. And that gray band is roughly around 42.3 to 43.2K, and it's descending. So when you have these lines descending, it's going to compress things down a little bit and add pressure. If it doesn't break up above, it'll just push it down further. The Bollinger Band basis line, this middle blue line here, is descending fast, and that line is currently at 39.9K, roughly 40K. And if you notice here, all these candles here, even when it wicked up, it couldn't break the bull market. The Bollinger Band middle basis line here, and so I believe it's been below the Bollinger basis for 25 days now. And in the last two periods where it has been below that, it was between 12 and 38 days. So 25 days, we're getting up there near the 30 soon. I mentioned previously about the area of confluence, where we have this ascending trend line here, combined with the the Bollinger basis and the 23.6 fib level, and that's about it. It was right around here, and Bitcoin couldn't break above that, so it got pushed down further. Previous trading volume, right down here, it's more like in the average section. And the daily volume is, as you can see here, 2 days in a row, it dropped back below the moving average. Let's go down and take a look at these indicators below. The KDJ, the white J line of the KDJ, trended down further, and it remains in the lower level. The lower level starts at 20 and goes below, and it's currently registering at 1.9, and it's also below the blue K and the red D lines, and I gave that a bear. For the white MACD line, it curved down even at a steeper slope, slightly steeper slope than previously, below the red signal line, registering at negative 1,045, and it put in the 26th bearish histogram bar. And notice the bars here are getting a little bit taller, or taller, if you will, and it's getting more red, and so it's going to bend down some more. And this is it can go down further. Like I'll show you here. If we move this up, it went as low as down here. Look at this. That was 33, 37, and right now it's up here. So Yeah, it's got some ways to go. So this bottom right here, and to compare to where it is right now. Oh, sorry, my bad. I was reading KDJ. Down here it's negative 2,641, and here it's negative 1,044. So it can go even further, but it's been hanging just kind of almost horizontal, but trending down slightly. Down below we have the red RSI, blue CVD, and the white momentum indicator. They're all trending down sharply. The red RSI line is at 38, and that's below the mid level of 50. I gave that a bear. The blue CVD line is at 1.8097 million, and I gave that a bear also. So notice the blue line here, it's still on the upper half. It's heading toward the middle, but still on the upper half of its range. The white momentum indicator flipped down to negative 3,702, and that's this line here, and it's on the towards the bottom half, but near the middle of its range. I gave that a bear also. Whoa, what happened? I think another candle just got printed or something. So overall, this chart I gave it a bear, and here's a summary. Intraday, BTC is likely to drop below the lower low, which is this yellow line here. It's funny that it's already dropping after I prepped this chart here. So hey, pretty good prediction, and which is 37.9K, and head towards 37.5K, which is this green line here, where I said FOMO here. It'll be bearish if it breaks below that 37.5K support, and it'll be that'll be bearish, and it'll be bullish if it breaks back up above the Bollinger basis line, the middle line here, because it's been pushing it down. So that's where we are. And let's take a look at some other charts. Here's the options, max pain. You can see that max pain for May the 1st, 39, the 2nd, 38K. For the 6th is 40K. For the 13th is 40K. But we want to also take a look at the volume and the open interest. Here you can see from the 1st to the 6th, there are more puts, option puts. Puts are the contracts that allow the investor to sell. Okay, they have the option to sell, but not the obligation. So for these handful of days here, first week of May, there are more contracts that have been executed already with more puts than there are calls. But if you look at open interest, which are contracts that are still pending, we don't have a lot of open interest contracts open right now for the 1st, the 2nd. But for the 6th, there's a little bit more, and it's pretty even between puts and calls. Calls are the contracts that allow the investor the option to buy, but not the obligation. So as far as max pain, you know what? They haven't been very accurate lately because macro environment pretty much is driving the price. Here's the heat map. We can see the sell walls on top. The major sell wall at 50 is still there, and the buy walls below. We got one at 36, 35, 30, 25, and 20. Those are the major ones. And currently, according to cumulative volume delta, today in this last hour here, there are more aggressive market sells than buys. And market sells and buys are different because they're just selling at the current market price or buying at the current market price versus setting a limit and waiting for those targets to hit. And you can see the meter here is almost maxed out. Here's the liquidation levels for Bitcoin according to High Block Capital. Yeah, it's showing $3.7 billion on Binance alone for 20x to 100x high leverage positions. And this is the money, the excess money, the difference between the shorts and the longs. So here are the short high leverage levels, the money in these levels minus the money in the long levels down here. Then you get this. At this rate, at this amount, it's not going to do much. Macro is going to drive the price movements, especially the correlation with stocks, especially NASDAQ and S&P 500. And we're back to the chart. So that's it. I appreciate your time. Please help spread my analysis to help others stay informed by smashing the like, ringing my bell, hitting subscribe if you haven't, and sharing your thoughts in the comment section. And especially if you find value, because it takes a lot of time to prepare this. Peace. And I think I have time to make up some more videos from Thursday and Wednesday. But I'll do that later this evening if I have time. I gotta get some chores done first. So if I don't see you in those videos, I'll see you tomorrow. Peace.